Welcome to TradeTheMBI.com. This is John. This report is for the 24th. Well, we got a continuation of softness. It wasn't really bad. We started out with a little bit more volatility. I know it doesn't seem like much because we're still right in this range, but given how narrow the day ranges have been, 10, 12 point move in any direction actually becomes a little bit more significant. It's not something we've seen in the previous days back here in the run up after the election and the exuberance. I'm not going to see that. I think that we saw a little bit of the difficulties that are going. It'll be interesting to see. We just had the announcement on the Brit exit is going to require a vote in Parliament. That's going to derail that, which could actually help the dollar. There's been this wide commentary about the overvaluing of the dollar, and so it took a major hit the other day, which we'd already had a little bit of a buy signal, so that sort of supports what the central banks had wanted to see from that. Daily, MBI Opus, we have one version of the futures as a catfish, and then the other program, put that one up, had already got a Rainbow Hawk in there, two of them back to back, and that entry right around 63, so literally exactly where we are. No change from that standpoint. What we do see though is a gentle building of midterm buyers here. Still, long-term buyers not really active in this setup completely. They pretty much absorbed everything in here and about to get into that. Now, if we move into that oversold where we can dip down below, even the potential now turn right here could be good, but we would need to see the orange moving lower. We're not seeing that at this particular point, so anything at this particular stage is going to be a bit muted. NASDAQ outperforming both cases. In fact, in its dip, you see the difference between that ABM being all the way touched on the green with the S&P, but for the NASDAQ all the way at the peak. Having issues with my Dow chart, so I have to figure out what's going on with that one. And we need to move these bars all the way down here because can't see, but we've pushed back up into the range and hit a little resistance doing that. But this is where we said the euro really wants to be trading. Hasn't gotten back there yet. We had the slide off after the pro ideas of U.S. growth, but now I think they're starting to realize that some of the hyperbole about stimulus and those things is not going to happen all that quick. It takes time to get anything. It's easy to say it. It's another thing to actually see it happen. And so the reality is they bought the news, and now you're selling a bit of the reality. The spike in TLT, a little unusual given the conditions, but that very thing that causes doubt about tax breaks and or growth also helps bonds, because then you have a status quo which isn't going to cause anything to move. Here we just the same malaise for oil. Any pop is just an easy shortable opportunity given where things are at. And as I said, the gold trade to the long side, no reason why that isn't going to continue. And here we look at our 5K chart. We had the nice little short signal that took place at the beginning. We faded down, and with the setup, we had the change in the new shakeout right there at the transition point. And pretty much we traded even. We ended up with a secondary version of the same buy. It was pretty close to right around the same spot when we dipped down. Shakeout reset right here. And we've been pretty much in an up run from that point. So been no change in where that status is. This was a premature signal in this one, and in the new configuration you wouldn't see that. It would just be a continuation of green from the shakeout standpoint. So those are good improvements that I think will help from an intraday chart standpoint. It just makes it easier when those colors match up. So made a little more progress. The difficulty is the one where identifying the range when the orange here is caught between cyan and red. It's easy to see that. It's the other thing to actually put it in coding language that checks it on a regular basis. It's a little more complicated. But those are the things that I take care of behind the scenes. Needless to say, though, we're just going to be looking for, I would guess, a pushback to the upside here from there. Back into the 270 range would be normal, given the fact that there may be a little slowdown in some of the activities. It's only been day one, but the market will feel more comfortable as certain identifiable policies can actually be attributed to something. And the reality is that things aren't going to move at a lightning pace. I think it's going to be actually something the market likes when they see that things are going to be more orderly than just boom, boom, rapid fashion. So it's a different way of looking at things. So it's certainly going to create a little more anxiousness, and I think when you have people get anxious or uncertain, usually leads to a freeze in the market and or a downdraft. So we're going to keep an eye on that, and I think that you may see some of those sudden dips when there is that kind of dramatic uncertainty to be followed by rapid returns when things are calmed down a bit. So it's kind of an exciting time. It's a little bit better, and hopefully we'll start to see more of this 15, 20 point volatility will certainly make things a little bit easier to trade intraday. From a longer term range, though, I think we're just looking for that reset of oversold, even though the price hasn't moved a whole lot, and we probably will start to move towards that 2350 that I've been talking about, since last year. As always, though, trade well. We'll talk again later.